Hi, this is Amir with the US Chartbreakers. We haven't done this since the pandemic a couple of years ago when things obviously got rather boring, stuck at home, and everyone was at home gambling their furlough money on the stock market. So that was obviously quite exciting. Stocks like GameStop and others are doing rather well at that time. What was interesting that in the last few days, especially on Thursday, was the way the market gapped up. All the major US markets gapped up after looking as though they were going to fail at a line of resistance. In the case of the S&P, that was one since well, from August, so 38.50 or so, the line in the sand. And it just looks as though actually the market was going to roll back down. I think a lot of people calling that to happen as well. So maybe it would have gone up to 38.50 and then back down to 3400, continuing the doom and gloom scenario that we've had since August. But handbrake turn through the 50-day moving average, unfilled gap to the upside, which is what you tend to see in such situations when they're trying to catch the market out, and then breaking the high and closing above the high of the gap up day on Friday to end the week. So looking quite decent. I suppose the least one would expect now there is on the S&P is 40.80 or so, the 200-day moving average. Even if you fail after that, that also fills a gap there on the daily chart from September, and the best case up to 44.80, which obviously seems miles away, but that turnaround that we had this week could be pivotal. In the RSI window, we've got an uptrend line there, so bullish divergence with the October bear trap there, October the 13th, and then we have had the higher highs and lows ever since. We're going on to the stocks and starting rather logically with Apple, A for Apple, obviously. And here we've had an island reversal, so gap down at the beginning of November and gapped higher. Bear trap island reversal, and also an end of week close through the 50-day moving average there at $148. Above that on an end of day close basis, looking for at least that August resistance line there at 154, and perhaps up to a September resistance line projection as high as 158 by the end of, well, ideally the end of this month, but at least by the end of next month as a year-end rally. This stage only really back below the floor of that gap there on 138, really killing the idea of a potential rebound. We've got bullish divergence as well, so all looking all in place there for a move towards the upper 50s, especially while we hold above the 50-day line. On to another famous name in the tech area, Adobe. Here you can see a similar picture to Apple. Well, actually, rather bigger chart. So we had two massive gaps to the downside in September. False dawn there in October, a gap fill rebound, and then the massive gap through the 50-day moving average and that August resistance line there around $310. And the view now is that at least while there's no end of day close back below the October peak there around $330, $330.50, we should be looking towards the top of that September gap, 365 over the next couple of weeks. Best case scenario, target up to 400 perhaps by the end of next month. But everything looking good while we're above the floor of the gap and the 50-day moving average there around $311 on Adobe. Next stock is one which I haven't looked at before, but here we have a similar setup to the last two stocks. So the double, well, you have the island reversal, bear trap gap reversal as well. Bullish divergence, breaking the August resistance line and the 50-day moving average at 214 and above that. Looking for at least post-October resistance, the peak there at 234 over the next couple of weeks. Maybe by the end of next month up towards the 255 or in 260 area, which is a September resistance line projection, and the top of a post-September triangle, broadening triangle on the daily chart. Moving along to another situation which is of interest at the moment, Home Depot, or Home Depot as you would say over here, I suppose. Here we've got the 200-day moving average and initial November resistance around $302. Above that, looking for the top of a rising trend channel from August as high as $350 by the end of next month. Once again, a market which has broke a line of resistance, which took pretty tough to break from August, and that running through the $300 area. So the shares certainly catching people out. So you can see on the Wednesday, looks as though we'd already topped out. We're heading lower towards the floor of the channel and $280. Moving on to the next situation, one of the tech stalwarts, Intel. And here, the similar picture, we gap down there in October, failed rally there at the end of October as well, but gapping through the 50-day moving average and 2-day support at former November resistance around $29. Above that, looking for up to $34, $35 at the top of that rising trend channel from September by the end of next month, or hopefully even sooner. But upside here, certainly while we're above the $28 area, and that might be attractive if people don't want to risk, who prefer sort of a decent risk-reward situation. Here we got Invesco, which I suppose is a more dynamic version of the other shares that we've seen. The island reversal, so the gap down there in September, false dawn in October, and then the gap higher on Thursday. Got a decent neckline there for the shares at $18, around $18.10, about $18.08 and 8 cents, and above the 200-day moving average there at $18.40, looking for the top of that rising trend channel from July, as high as $25 by the end of next month. So if nothing else, this shows that the charting situation for many of these stocks is very similar. So hopefully there is a lesson in that, and they will all work together in sync. On to Meta, which has obviously been one of the car crashes of the autumn. Here we had that massive gap to the downside in October, but we've had two unfilled gaps to the upside so far in November, which in some ways you could say cancels that out. The low before the gap down there at $123, and that's got to be the obvious resistance over the near term, and that would be valid while we hold above the floor of the gap there around $104. Difficult to get the stop loss any tighter than that, I suppose, other than the support there on Friday at 108.82, but 123 looks as though could be on the cards there for Meta, given those unfilled gaps to the upside. Onto a stock which is also looking quite dynamic at the moment, Mohawk Industries. Similar pattern to the other things that we've seen, the gap down in September, gap higher for November, neckline resistance there around $102, and above that looking towards the 200-day moving average and an August resistance line projection as high as $124 by the end of next month. Moving on to another stock which is noteworthy, and here the gap pretty sharp for the shares of Market Access. The nice part of this is that recent resistance or post-June resistance broken around 280, so that means an end-of-day close stop loss below 280 could be as tight as you like, and take us up to 325, which is a resistance line projection from the early part of the year back in April. Again, that's a year-end target, although maybe that's a little bit ambitious to hit it by that particular time. Stop loss, as I said, 280, but ideally above the top of the gap there at 261. We still have a chance of the bull scenario and a break higher on its way. PayPal, the next contender, and another famous name, and here we've got the island reversal over just the course of November. Beautiful hammer candle there to start things off. Hammer candle, and then a gap higher, unfilled gap to the upside. So actually, this was already moving ahead of Thursday's at the start of the week, ahead of Thursday's gap higher for the rest of the market. In fact, the end of day close on Monday really the trigger to go long of this situation. But even that notwithstanding, above the 50-day moving average now, around $87, looking for a retest of the $100 area over the course of the rest of November. Top of the channel here as high as $110 maybe by the end of next month or going into the new year. But certainly while we're above the $80 area, looking quite confident that we'll see more gains for this market. Moving on to the last stock today in the US chart breakers, Walgreens, and here we have we already had actually the gap earlier in the week, so gap to start the week, and then a gap higher on Friday, so it's sort of a bit of a delay here through the 200-day moving average, and that suggests that while we're above the 200-day line on an end-of-day close basis, we could head up to $48. Stop loss at end-of-day close back below the floor of the gap there at 38.60. But ideally, there's not really any price action back below the $40 area. That's it from me today. More updates on the US market over coming days.